Hi, my name's Amit Meta. I'm a portfolio manager on the JPMorgan Indian Investment Trust. I've been part of the emerging markets and Asia Pacific team at JPMorgan for over a decade. I've been in the investment industry for over 2 decades. I'm also supported on the Indian Investment Trust by my colleagues Ayaz Ibrahim, based in Hong Kong, and Sandip Patodia, based here in London. So the team's a lot more than just about the 3 portfolio managers that I mentioned earlier. We have a strong breadth and depth of analytical research. We have the ability to both have industry experts who are based in many geographies around the world, but also we have the ability to do on-the-ground research by having analysts that are based in India. And this is a real advantage for us because it allows us to not only just cover the larger mega caps, where you do need to have some level of global expertise, but also go all the way down into the small and mid-cap businesses where actually there is a huge advantage of having people based on the ground that can go and visit the companies, the operations, see the corporate managements, but also take those judgments around culture, languages, preferences, which may be different to when you're meeting large cap businesses. So it's the balance between having industry experts and local expertise that's a real advantage for us on the investment trust. And the way we manage the investment trust is using the depth and breadth of all of those resources to be able to find the types of investment ideas that we're looking for. So for us, the management of the trust is very much starting with the corporate level decision. So what we're looking at is, firstly, is it a great business? And we try to identify that by thinking about what is the long-term potential of that particular business, what is the levels of profitability, and how long will they sustain. And particularly in emerging markets, it's really important to have a view about the people running those businesses and how aligned their interests are with minority shareholders. So we spend a lot of time thinking about the governance and the governance frameworks around the businesses that we're looking to invest in. So the first thing that we're trying to assess is the corporate quality, and that really starts with asking very simple questions around the people running the businesses, the long-term outlook, the underlying economics and profitability. After we've made those judgments around corporate quality, then we think about whether we think we're going to make an attractive long-term return, the valuation decision essentially. But it is very much in that order. So the first thing is about, can we find great businesses? And I'd say that actually India as a market is a pretty fertile ground for finding businesses of a high level of corporate quality. So then it's about the idea around, can we make an attractive return? And we get lots of questions around the valuation premium that you're expected to pay in places like India. And I would say you need to connect valuations both with the long-term opportunity, but also with the levels of profitability that the corporate sector in India provides. And I would say that India as a market is one of the most profitable underlying markets around the world. And secondly, I think it's the area that most understand very well to be the most attractive growth market around the world. So there is certainly an expectation from my perspective that there is a justified reason to having much higher valuations, premiums, in the Indian market versus other markets around the world. From a top-down perspective, India continues to look like a very attractive growth opportunity, and that comes from expectations of double-digit economic growth supported by low and falling inflation, which will help to continue to keep interest rates at current levels or continue to see them falling. Now, that's the sort of economic backdrop, but also supporting all of that is a number of initiatives that we've seen in the market. One being the beginnings of a corporate capex cycle, which I would say that's been an area that's been relatively disappointing in the last decade. And our expectation is actually the next decade looks much better for an investment perspective. Unlike other developed or emerging markets, there isn't legacy infrastructure that they need to rely on. So there's an ability to skip, particularly in things like telecoms, where you're able to skip the legacy infrastructure, or digital and banking, that you can get yourself into the most modern technologies, and that should really help, particularly in things like digital penetration, your ability to reach further and further into rural markets. And then even in industries like technology, where you're seeing a much more balanced growth, particularly in having more and more women in the workforce, and just getting more and more of that diversity agenda right up front, rather than having to think about that once you've got to a much more developed state. So look, I think there are 3 reasons to think about the JPMorgan India Investment Trust. One, which I've already talked about, is the people. And as I said, it goes much further than just the portfolio management team, but the depth and breadth of the resources that we have from our analyst teams across the world. 2, it's that long-term approach. And India, again, lends itself to a market that you want to take a very long-term view about investments and not worry about short-term trading opportunities. And I think there's a depth and breadth of opportunities to be able to find investment ideas. And thirdly, being able to leverage the nature investment trust structure and going further and further down the market cap spectrum, which again connects very well with the depth of resources that you need to be able to take those opportunities. So again, being able to find investment ideas in that small and mid-cap area where you're likely to see the most attractive growth opportunities. So I would say those are the 3 key reasons to think about the JPMorgan India Investment Trust. Yes, so look, I think for us, it's all about, as I said, the bottom up, the company level decisions. We spend a lot of time before we make investments in any businesses. We spend a lot of time meeting company managements, understanding how they see the outlook for their own businesses, how they see the long-term opportunities, how they think about capital allocation. Do they think that they need to grow their business to reach certain hurdles or certain targets? How does M&A fit into that, so mergers and acquisitions versus organic opportunities? So for us, it's very much about the company level decision first. I think on top of that, and layered on top of that, I think there are plenty of thematic opportunities within the market. And obviously the 3 big themes that you see across the portfolio comes from, 1, the change in consumer habits and behaviors. And that's really going to be driven by the change in the income pyramid that you're going to see over the next few years. And there's lots of estimates around how much that might be, but there's a potential over the next 5 or 6 years to have close to another 100 million people coming into that middle income bracket, which again increases the propensity to consume. Secondly, the area that we have significant exposure to, again, is around the financials industry. And again, that's an area that we see a huge long-term potential. And that really comes from levels of credit penetration continuing to be relatively low in India versus other, both emerging and developed economies. So whilst the industries here remain relatively fragmented, we still see strong opportunities for growth there. And thirdly, it's an area that has been obviously talked about a lot in the past, but continues to be an area of opportunity, which is the onshoring and offshoring side. And India, IT services sectors being one of the most attractive growth areas for a long period of time. We really don't see that changing, considering the level of gap in salaries and wages that the Indian population receives versus the rest of the world. So I think that those are 3 big broad themes that we continue to see as underpinned for the majority of the portfolio.